Hi, folks. Dan Bird here with the Daily Scan for Tuesday, Bloody Tuesday, the 18th of November. Market is heading lower, continuing to head lower. Yesterday, I sent out an alert that the daily market timing strategy triggered to a go to cash signal. We'll look at that in a minute. The long term is still a long, has not triggered cash yet, but could pretty soon. Let's see today. This is options expiration week as well. So Max Payne this week. I promised I wouldn't look at Max Payne because it hasn't been very reliable, but I will take a look at it today just to see what it says. It's pretty interesting. So I've got a bunch of other stuff to talk about too. So let's get to it. Let's start with the 10-minute charts as always. Now, I had a comment from somebody yesterday, which I really do appreciate, that the charts that I show, by the way, you can see here, these are all of the charts that I show. But I had a chart sequence that I usually show, and I had not put the other ones on the website. But I now have them on here. So the ones that say breadth, mid-cap breadth, small-cap breadth, S&P, and NASDAQ breadth, these are daily. They are now in the sequence right here. So you can click on any of these to see those charts, or you can create a chart list like I did and put them all in order and then just click through them the way that I normally do. So here's what it looks like. There's Monday. This is Tuesday. Little gap down, continuing to go lower, starting to come back up right now. We'll see how that does into the end of the day. Money flow, though, is kind of flat. I wouldn't necessarily call it negative. I just say kind of flat. It looks like the rotation is out of technology and discretionary. Communications is still doing well, which is where Google is, even though Google's selling off some today. But 2 out of the 3 aggressives are selling off or rotating. And the defensive sectors are the beneficiaries of that. So there's the rotation into defensive, which means the whole market is starting to get defensive now, expecting more of a downtrend. Can NVIDIA save us? Certainly can. Tomorrow night, we'll find out. Here are the cyclical sectors, financials, up slightly. Healthcare has been on a tear. Healthcare has been going up ever since last week. So it's the winner today. Industrials is up. Materials is up slightly. Energy. So there's, again, rotation out of the aggressive, in particular discretionary and technology, and rotation into the other sectors. So that's actually good for the market in general. Even though technology is 35%, just that sector is 35% of the S&P. So anytime that money rotates out of that, the market is likely going to decline. But it doesn't mean that money's coming out completely. It's actually moving into other sectors. So the idea then is to see what are the good stocks in those sectors. Here's the rotation, growth versus value, clearly out of growth, out of discretionary. This has been happening since way back here. Out of technology, out of semiconductors, down. Transports are doing okay, moving up slightly. But this one right here, semiconductors and technology, is the key. The next one is the breadth chart. This is one of the ones I just added to the website, so you can get that out there now. This is a daily chart. This is not a 10-minute chart. So this is a daily chart. This is the S&P. It shows you the percentage on the upper left over here. So percentage of stocks above their 20-day is only 32%. Above the 50-day is 37%. And above the 200 is still above 50. The 50 line is this pink line right across here. And bullish percent index is actually down quite a bit. It's down to about 40%. 40% of all the S&P stocks have bullish configurations. So 60% have bearish configurations. That's what that means. And that's below the 50% level as well. So this is now on the website. Here is the Russell 2000, same thing, heading down, starting to move up a little bit. Money flow starting to come back up. So we'll see how this ends the day today. And again, as we move into tomorrow, I think it's going to be might continue to sell off into tomorrow until we get that NVIDIA report. Mid and small caps are getting a little bit of a gain on the S&P today, but not very impressive. And here's the Mid cap breadth, again, the 50% line is the pink one. In this case, there's only 44% that are above the 200-day. And small caps, same thing, 44%, again, above the 200-day. But breadth looks pretty weak on all of those. And the NASDAQ 100 finally moving down. Money flow is pretty flat, not really telling us much. Advancers minus decliners is negative, and up volume minus down volume is negative. So this is implying that there's a lot of weakness, even if we do get a move higher. So watch out for that. And then the VIX, of course, the VIX spiked higher. This morning it's pulling back now, which actually could help the market into the end of the day. So keep an eye on the VIX. That's the important thing. It's at 24 right now. It was actually above 25 earlier today. So that is definitely in bearish territory. We'll look at the VIX over here, and I'll show you what I mean. There we go. Above 20 is bears in control. Below 17, bulls in control is clearly above 20. Put call ratio is continuing to move higher. Now, when this gets up to around 70 or 72, that's the point where we might reverse and start to go back up. But right now, there are a lot more puts being bought. Anticipation that the market is going to continue to sell off. The 10-year is pretty much flat today, so not doing too much. So that's what the VIX looks like. Let's take a look. A couple of things that I wanted to show. Bitcoin, I want to reiterate this on Bitcoin, the correlation with the Qs. I just watched a video today with Liz Thomas from SoFi, where she said she did a study of Bitcoin versus gold, Bitcoin versus the dollar, and Bitcoin versus the NASDAQ. And she said she was surprised. She thought it would be correlated with with gold, and she found that it is not correlated with gold or the dollar. However, she was surprised to notice that it was highly correlated with the NASDAQ, which is what I have been saying for months and months. And you can see it right here, highly correlated, going all the way back here to 2020, 21, really all the way back to 2017. Became uncorrelated slightly in these areas, but ever since 22, it has stayed up here in this highly correlated area. So as Bitcoin moves, so will the NASDAQ. Bitcoin is coming down right now, and the NASDAQ is as well. So let's take a look at that on the market bias page. We'll look at, we'll just go straight to Bitcoin. You can see it now. Interestingly, and something that's positive is that it currently, it sold off dramatically this morning, but now has a hammer, and a hammer at the bottom, which is a reversal candle. If it maintains that into the end of the day, into the close, then this may be a reversal in Bitcoin and even in the rest of the market. So keep an eye on that. Bitcoin really is a proxy for the NASDAQ because it trades 24/7. You can see this white candle is Saturday, the next red one is Sunday. So over the weekend, it showed you it was trying to recover, couldn't make it on Sunday, and then Monday fell apart with the market. So that's what's going on with Bitcoin. On the S&P, I updated all these. You can see it interestingly, the S&P came right down to the expected move. And that's where market makers price their options for puts. So does this mean it's going to bounce from here? That typically implies support, and it has a hammer today as well. So it might start to bounce higher. The gamma line is above the price, which means that it adds volatility. It means it could continue to keep falling, and it's below the put wall as well. So most of the puts were up here at 6,700. And the expected move is at 6,500. So the key support level, though, is this big red bar over here. That's the one that we need to watch. And in fact, if you go to the homepage, and you don't need a subscription for the homepage, but click on this little stoplight up here, what you'll see is I changed this to the S&P. It was VTI. But what you'll see is we're in the yellow zone right now, and the red zone is the bottom of that big red bar from October. That is the dividing line. That is the line that we have to hold. If we don't hold that, we're going much lower, probably going down here to the 200 at least. And you can see we're right now in a weak downtrend, continuing to head lower. Is actually below the 50% line right now as well. So that's something that updates automatically, as well as this little bar down here. You can see now it's got the small red one means that's the bar or the candle that it had yesterday as of the close yesterday. And this next one is the short-term trend, which is now bearish. But if you click on that, you'll see the actual chart. And you can see here the 8 moved below the 21. That's the short-term downtrend. And right here is that big red bar. That is very important support at 65.50. And the positive note, the market is bouncing back from that today. It is 11:28 a.m. on the East Coast. So this could be perhaps a reversal where we head back higher again. I think NVIDIA is going to have a lot to say about that tomorrow. But everything else is in the clearly in the about to move bearish territory. So all of these things we have to watch. You will never catch the top, the exact top. That will never happen. But the idea is to catch at least the 70 to 80% between the top and the bottom, and also from the bottom to the top. So if we get out right there, we look over here at the portfolios page, and you'll see that the short term went to cash yesterday. Also gave a bear signal on the short term right there, and it had a red bar yesterday. So that's this daily chart. You'll see there, red bar. This is where we went to cash. Turner went to cash on Friday, so pretty close. The long term is still in there though, but you can see we've got a red bar today as well. And if we look at the longer term, which is the weekly, this is meant to try to keep you in longer, but it will get you out a little bit later. So it'll be more of a loss when you're out. However, you will have been in for a much longer period. You can see here, Turner went out and back in right here, whereas my system stayed in all the way from back here, all the way up. So it needs to close below this 21 EMA down here, which is right now at about 319. It would have to close below 319. We're at about 324, almost 325 right now. So it's not there yet. It could turn around and start to move back higher. We'll see. But if it does close below that, then we will be out in everything. And we will have ridden it from this level here up to here, which is a nice run in about 6 months. So that's the way that works. What else do I want to talk about? Liquidity. Let's look at the Fed Watch. This is really interesting. I looked at this morning. The percentage or the odds of a cut in December have dropped dramatically. It's now below 50%. This at one time was at about 90%. So every day this seems to be dropping even more. Looks like now it's January for the first cut. So we may not get a cut in December. That's December the 10th. Now, keep in mind that we have a jobs number coming on Thursday, but that jobs number is only for September. So it does not include the government shutdown. It probably is not going to be too terrible. I think it will be more negative than the previous month. And the trend, I think, will be probably down. The unemployment rate might tick up to 4.4, which is still within the Fed's target. So I don't think we're going to get a jobs number that's going to move the market necessarily. I think NVIDIA will probably move it more than that will. Both of these could end up being more positive than expected. So we'll see. These are binary events, so you can't anticipate what they're going to be. Nobody knows what's going to happen. But right now, January looks like the next cut. And then if you just look at the 90% levels, the one after that is over here in September of next year. And then that's it. So only 90% levels all year next year. That's not too many rate cuts. So market, I don't think is going to like that. We'd like to see more cuts, especially the Russell 2000. That's the one most sensitive to rate cuts. So here's Max Pain. I said that I would show it at least. This is for the close of last Friday. So the SPY target for the SPY closed last Friday at 671. The target is 653. That's only down about 2.7%. So let's take a look at the SPY. There's the SPY. Interestingly, the low is 655, 656. The low of this big red bar right here is 653. So that's what Max Pain is indicating. I think if we get down to this level, 653 on the SPY, it's about 65.50 on the S&P. I think that is going to be solid support, and we likely will get at least a short-term bounce, maybe back to the 21. If we get down there right now, everything is moving back up today, so might be a reversal day today. Keep that in mind. So what else on Max Pain? NVIDIA, 172.90. Let's see what NVIDIA is doing right now. Also has a hammer, so reversal. The low was 179.65 on NVIDIA. So 172 is right about down here, right about, or this red bar is right about here. So 172, that's what Max Pain implies. What Max Pain is basically is the equilibrium point between puts and calls. So you just take the total number of puts, total number of calls, the open interest in each, calculate what the difference is. And if there are more calls than puts, you get a negative number, which means to get back to equal, the stock has to sell off. Notice on AMD how much what this implies is that there are a lot of calls on AMD right now, a lot of calls on Micron as well. So these big numbers right here means there's a ton of calls in each of these. Google too has quite a bit. But let's look at AMD and Micron, just out of curiosity. There's AMD starting to come down, but Max Pain was, what was it, 192 on AMD. That's way down here. 192 right there. Not likely it's going to get that low. Could get back to the 50 potentially, but it's really a directional move. So AMD is coming down, but it also has a hammer. And then MU, that's hanging in there. Actually, it's sitting right on the 21. And there's obviously a lot of calls on this, which is what Max Pain implies. And the target on that is 192 also. Interesting. 192 on Micron as well. So that would be right below the 50-day, right on this level right here. So that's a pretty good support level, but not to say that Micron's going to get down that far, unless everything falls apart here with NVIDIA. That'll be the key. NVIDIA could really drive everything much lower. All right, what else did I have? Let's look at mortgage rates real quick. For those that are on the website, the charts page, there is a chart over here for mortgage rates. Let's see if I can find it here. 30-year mortgage, 35-year mortgage rates. 30-year mortgage is tied very much to the 10-year yield more than anything else. So what the 10-year does will be reflected in 30-year mortgages as well. And what you can see is that the 10-year is not coming down as much as most people thought that it would. So it's keeping mortgage rates up there as well. So if you want to see mortgage rates falling, you want to see the 10-year falling a lot more than it has been. Right now, the 10-year is back here at about 4% roughly. So Um, it's actually at 4.1 for the 10-year. So you can see that the trend for the 10 years, draw a line across these bottoms, is higher. So mortgages are going to follow the 10 years. So that's the thing that you have to keep in mind. And while we're talking about that, let's take a look over here at liquidity. I have a chart here called liquidity. This is an important chart because global liquidity will determine which way the stock market's going to go. If the dollar is going lower, then there's more liquidity and there's more global liquidity. If the dollar goes lower, 60% of countries in the world tie their currencies to the dollar. If the dollar falls, that means they can refinance at a cheaper rate, and it puts more money into the overall system. So you want to see a falling dollar. Oil, same thing with oil. If oil is falling, all countries in the world need oil to generate energy. If that's falling, then they have more liquidity. Right now, it's rising. Both of these are rising right now. And commodities too, same thing. Not quite as much as gold and the dollar, but commodities are the same and they are rising. So all of this is implying that liquidity is just slightly, slowly coming out of the system. Now the Fed is going to stop their QT, their tightening, on December 1st. That is going to help with liquidity. If they start back into QE, and I think to do that, they're going to have to see more data. The CPI data and the jobs data coming in November might convince them to go back to QE, but just QT, just stopping the tightening part, will put more liquidity into the marketplace. And I expect to see, I think the Fed will probably cut in December because they know that liquidity is really important, and liquidity is based on, a lot of it is based on interest rates. Here's the 10-year yield, which has been falling, which is nice. And M2 money supply right here is pretty flat, I'd say, recently. This is the 1 month rate of change for money supply. And the S&P right here is rolling over slightly, but it certainly has not broken by any means, has not broken through. All right, the last thing I want to look at is the Magnificent Seven. Let's take a look at what they are doing today, as the market was selling off, but it's starting to come back right now. Let's look at the zigzag charts, because this shows you whether they're getting back to new highs. You can see that with NVIDIA sitting right on a really important level right now. So NVIDIA really needs to stay above this trend line. And interesting that it's sitting right there just before earnings. The accumulation distribution is slightly negative. It is underperforming its peer group, even though it's outperforming the S&P. So I'll just click through the rest of these very quickly. Apple, just look at to see if they can get back to new highs, if they're struggling to make new highs. Microsoft, right on the line, actually starting to drop through the line. Broadcom in a channel. Amazon, definitely struggling and heading down quickly right now. Its key support line is down here, so it hasn't broken that yet, but it's struggling to make new highs. Google made new highs with the news. I saw somebody yesterday, I think it was Dan Nathan or the other guy that he talks to. They said, yeah, Buffett bought Google over the weekend. Well, that's not what happened. And I talked about this yesterday. Berkshire Hathaway announced that they took a position in Google, but the dates for those reports was September. It wasn't over the weekend. Over the weekend was the announcement, but you're not going to know when Buffett takes a position until a quarter later. So that was very misleading when they said that. They said that Buffett took a position over the weekend. That's not what happened. He took a position back here in September, where you see this big run up right here. That's Warren Buffett. That's Berkshire Hathaway. It's not right here. So as everyone, here's what it looks like. You can see Google had a nice run yesterday, but ended with a shooting star candle and could not break out. That's a failed breakout. It actually was going down today, but it's got a hammer today as well. So it might be ready to move up. Everything's waiting for NVIDIA. So Just remember that, because Buffett does, you're not going to know what Buffett does until 3 months later. Tesla definitely broken down. Meta clearly has broken down, continuing lower. Netflix definitely broken down. Palantir struggling to make a new high and is now breaking through a support level. So Palantir could be in trouble. Costco definitely has broken down. AMD has not broken down, but it's struggling to make a new high. Arista Networks definitely broken down. Oracle definitely has broken down. Eli Lilly has been the big winner across the board, and it's sitting right up here at a high again at 1034, and still basically going sideways right now. So those that were thinking of doing a covered call in Lilly, the time to do that might be coming pretty soon. You really want to see it move down a little bit. So there's the sideways movement in Lilly. You really want to see it start to roll over and see these momentum bars change from light blue to dark blue up here. They're already starting to move down a little bit down here on the MACD, but you want to see that a little bit more before you do a covered call. But it might be getting pretty close to doing that. All right, so I think that was the last one. Lilly, GE Vernova, sitting right near the lows. Micron, which we talked about. Micron now sitting right on the 21. So it might be getting ready to break down, but it still looks pretty good. All right, so that's it. One last thing, really important thing, and I've talked about this before, but nobody seems to be talking about. Actually, today, last couple of days, I've been noticing a lot more discussion about this, but I've talked about this about a month ago, and I did so with Zuber. Maybe I'll bring it up again this Sunday with him. But the Japanese government bond, the JGB, the 30-year JGB, I said at the time that it had been hitting all new highs. The Bank of Japan stopped doing its yield curve control. And because of that, it's letting its rates rise. Right now, it is at 3.3. It's actually 3.30 this morning. It's at 3.32 already today. But you can see this parabolic move in the 30-year. I said if it hits 4, though, it's going to have impact and ripple effects across the global economy, across all countries. And the reason for that is that when there's cheap money in Japan, that investors will use that cheap money for the Japanese yen, and they will buy American equities and other assets around the world because they can do it with cheap money. But if this is starting to go up, that's not the case any longer. So what will happen at some point, and I don't know exactly when that point will be, but this is continuing to move up parabolically. It's when I talked about it before, it was only down here about 3, and now it's at 3.3, and it's heading quickly to 4. What happens is they will start to pull their money out of the other assets in other countries, and that includes US equities. And when they start pulling out of US equities, that it will have a dramatic impact, and I would suggest probably even a bigger impact than NVIDIA missing tomorrow. So this could be right here, the canary in the coal mine. I've talked about that before, and it's continuing to go up. I'm starting to hear other people now talk about Japan and how it could affect the global economy. But I've been warning about this for a little while now. In fact, the other chart that I included on here was the 10-year spreads between the US and Japanese and Germany. And you can see right here with Germany, it's still slightly moving higher. 10-year is just going sideways. US dollar starting to move back up. But the spread between the 10-year, US 10-year and Japanese 10-year is now below 2.5. If that gets down here to this support line, which is at about 1.75, then I think that unwinding of the carry trade is going to start happening in earnest. So keep an eye on this. For those that are subscribers, keep an eye on the Japanese government bond 30-year right here, and keep an eye on the US dollar versus the yen. It's heading back up here to an all-time high once again. So this is another area that shows strength in the Japanese yen, and that is going to have an impact on how investors, global investors, are investing in other countries, in particular the US stock market. So this could have a bigger impact even than the AI bubble bursting. So I'm not saying that it will. This is just my opinion. But the charts are here. There's the data is here, so you can just always go here and look at it. All right, that's it for today. Sorry, it was kind of a long one. Let's go back and see what the S&P is doing right now. The time is 11:45 a.m. S&P is still trying to make a comeback. So we'll see if it can continue to go back up. And still, technology and discretionary is still looking kind of weak. All right, so that's where we are. Stay safe. Be careful out there. I'm going to try to do a technical Tuesday, but it will be before the close of the market, probably this afternoon, but I'll post it to drop at 7 p.m. if I can get one done. I'm doing a lot of stuff tonight, so I don't know if I'll have time, but I will try to do that. The topic will be rate of change and also how to import a chart list into Thinkorswim. All right, thanks for watching, everyone. Have a great day. Be careful out there while you're investing, and I'll talk to you tomorrow. Take care.